Hi, this is Adela Knox, Head of Content at Finovate. Welcome everyone to Finovate Live. Over the course of this week, we'll be bringing you a range of webinars, thought leadership articles, exclusive interviews with FinTech pioneers, as well as our first e-magazine of 2019. Remember to visit the Finovate blog for all Digital Week content. Next up for Finovate Live is Brett King, CEO and founder of Moven, who talks to our resident Finovate analyst David Penn about the banking system of tomorrow. We will be live tweeting this webinar, so you can join in the conversation using the hashtag FinovateLive. While our webinars this week have been pre-recorded, you can still submit questions during the presentation. Send them to us using the Ask a Question module on your screen or by tweeting us. We'll be passing this on to the presenters and coming back with a unique article featuring the answers. You will also notice we have compiled a resource list for all our webinars. Feel free to download and click through the information we've curated for you. I will now hand over to David.
Thanks for joining us. I'm David Penn, Research Analyst with the Finovate Group. With us today is Brett King, CEO and founder of Moven, host of the Breaking Banks podcast, and author of the new book, Bank 4.0, Banking Everywhere and Never a Bank. Bank 4.0 discusses the future of banking and FinTech and examines the factors that will determine which banks will make it and which won't. Banks are in trouble. It's not just the likes of HSBC, Deutsche and Citibank who have shrunk their branch and office footprint to a fraction of their previous glory. Every bank in the modern world that is dependent on branch revenue is in virtual survival mode, hoping for a miraculous reversal of emerging customer behavior. In countries like China, Kenya, and 20 other nations in Africa alone, mobile payments far exceed those made using traditional bank accounts and artifacts. The most efficient credit risk models aren't owned by banks anymore. The best investment advice is coming from algorithms and robo-advisors that can adapt your portfolio in real time as markets shift. Assets, identities, and transactions are being transmitted on blockchains, tangles, and hashes that make old payment networks look obsolete and unsafe. Banking has been blown apart. The banking system of tomorrow is being built from first principles today, in the same way Elon Musk built SpaceX and Steve Jobs designed the iPhone. Just ask yourself, if we were building the banking system today from scratch, with all the technology and knowledge we have, would you end up with a bank branch that requires a signature on a piece of paper before issuing you a passbook or a checkbook? No way. Bank 4.0 is about the banking system that we're building today and why most banks won't survive to see that day. Thanks again, Brett, for joining us today.
I'm really glad to be here, and thanks for a very copious introduction.
Well, you're a man who deserves that kind of introduction. I'm very, very glad to get an opportunity to speak with you and talk with you about your book, Bank 4.0. This is your sixth book, follows on from Bank 2.0 and 3.0. Can you tell us what led to the writing of Bank 4.0?
Well, so, it's been almost 7 years between Bank 3.0 and 4.0. So I guess the real question was, or the real issue was, I didn't know what Bank 4.0 was. Certainly a few years ago when I was writing 3.0, whereas now that's sort of become clear. So I really had to find what was the paradigm shift. What was going to be different this time than, just sort of the iterative approach we've taken to new technologies like the internet and mobile, which sort of defined the previous iterations of banking. And it wasn't until I saw what was happening in emerging markets and some of the really different approaches to banking that came out of that, I had this epiphany of, where this was going to take us over the next 20 or 30 years.
No, interesting. You introduced a concept known as first principles thinking and design in the book early on. Can you talk a little bit about that concept?
So if you look at the most disruptive technologies historically, they all share something in common. So whether it's the printing press or the automobile, the internet, you mentioned SpaceX and the iPhone in the start of it. If you look historically at those innovations, they all share this first principles design philosophy. So they didn't take an existing business and improve on it with technology. We're talking about things that were radically different from what had come before. And so this first principles design philosophy, as Elon Musk elucidates it, is, you strip things back to their core physics. What's the problem you're trying to solve? And how do we deploy technology available today in doing that in the most efficient manner possible? So, what you have often with banking is, with the internet and mobile as examples, we've tacked them on as channels onto the existing model, and that's iterative in nature. So we still have the same products, we still have the basic processes, but we've been forced to make them more efficient, or built them into these new customer experience layers. But with first principles, it's radically different. First principles sort of strips back the core utility of the bank and says, how do we surface that utility through these emerging technologies in a better way than we had previously? So, for example, instead of putting a credit card on a mobile phone or on a voice-based AI like Alexa or Siri, in the future, we will give you access to credit when and where you need it. We won't give you a credit card. And so that looks, when you're starting to design that experientially, it's a very different design premise.
Absolutely. And that reminds me of another concept that comes up in the book, and it has to do with the notion of embedded banking experiences. And I'm wondering if you could maybe talk about the difference between embedded banking experiences, sort of as you define them, and the products that we have today that you're talking about a moment ago that we put on mobile smartphones, for example.
So, a great example is mobile payments coming out of China. So you have Tencent WeChat, and you have Alipay and Financial, who have sort of revolutionized the mobile payments experience in China. But these were not sort of taking the existing plastic card model and the point of sale model that we have in the West and adapting them. This was a fundamentally new approach to mobile. Now, when it started out, most of the West who was observing this was sort of say, oh, QR codes, versus NFC. But in November last year, when they had Singles Day, Alibaba's big, sort of Cyber Monday, Black Friday competitor, you had $31 billion in sales, but 60% of those transactions were done using facial recognition as authentication. And so now you say, well, hang on a second, this is a fundamental shift. You've got no card, you've got no point of sale terminal, you've got no signature required on an application form, and I just pay just by showing my face. Now, if you start thinking about the credit card or debit card model we have in the West and how long it would take us to adapt that model to what Ant Financial or Alipay and Tencent WeChat Pay can do with facial recognition today, it might take us another decade.
Right. Very interesting model. And thinking about things like the capacity to use facial recognition certainly lends itself to a conversation about some of the other technologies that are being leveraged to provide some of these experiences. You talk about artificial intelligence, AI, and machine learning quite a bit. How do you think that those are going to affect banking and financial services and affect employment in banking and financial services in particular?
So actually, in my last book before Bank 4.0, Augmented, I sort of tried to cover the big disruptors, and there were sort of 4 disruptive themes. The first was obviously AI, and we can put sort of robotics under that, because if you've got a robot that's autonomous, obviously it must have some form of AI. Then we have embedded technology. So these are the technologies embedded in the world around us that change our behavior and change our lives. So it might be, sensors that we ingest inside our body that record our, our health and, biofeedback and so forth. It might be smart glasses or spatial computing that we wear in the future, replacing sort of the smartphone, or, the sort of voice-based smart speakers, which will increasingly become these sort of personalized AI. Then the third disruptive theme was health tech and gene therapy, and the fourth was smart infrastructure. So how economies will differentiate in the future, that it's sort of AI, smart value chain, all of that built in. So that's sort of the core disruptive thing. But obviously in banking, the first 2 are key elements of disruption. So one is the customer experience layer, how customers will get access to banking day to day. And the second is sort of the underlying data and behaviors and mechanisms that lead to access to financial services. And the AI part, based on research that's been done over the last few years, we see that probably about half of the jobs that we have in banks today will probably be done by artificial intelligence in the future. Now, wow. the good news is that we'll create a number of new jobs. We'll have AI specialists, we'll have data scientists, behavioral psychologists, experience designers. New jobs will be created. But the question is, will we will be one for one in terms of replacement? And ultimately, economic theory suggests that we are actually seeing, as AI is injected into the economy, a sort of fundamental shift in the way the supply and demand curve works. So in the past, when you had increasing demand, you would adapt supply by injecting labor into the market so that you could meet the demand. But with AI, essentially, once the AI is created or a software-based company is created, its ability to service that demand doesn't depend on labor. And so that's the fundamental economic shift. So ultimately, we are looking at, the more and more we use AI, the more employment is at threat. And ultimately, we're going to have to figure out a way to solve that from a social perspective.
Truly. Definitely is big or bigger than financial services ultimately. Thinking about the human side of this equation, in terms of looking at the banks themselves and the banks that are going to be able to make these transitions, make this sort of leap to Bank 4.0, is there anything in terms of the org chart, in terms of leadership, that you can look at a bank and say, this is the kind of bank that I think is capable of making that necessary transition?
So, we've talked a lot about Alipay and their parent company, Ant Financial. So, they are, breaking a number of records in the financial services space today. They have the largest deposit product on the planet, Yui Bao, which is, literally translates as hidden treasures, about $300 billion of assets under management, which they've, built over the last few years. Or Tencent WeBank. WeBank, is a separate sort of challenger bank in China as well. Similar sort of story. So if you're looking at the phenomenal growth of these technology-based financial services organizations, and you see they've got lowest cost of acquisition, they're growing faster than any other financial institutions in the world right now, and you say, well, that's clearly that's where the competition's coming from. And so you say, well, you see the trend, BBVA, DBS, JP Morgan Chase, all saying we're going to become technology companies because, we think that's where the threat is coming from. So when you look at the architecture of a big tech company or the larger FinTech unicorns playing in the space, their org chart looks very different from a traditional bank. The board is full of technologists, the exco is full of technologists, and their culture is very much around this innovation and working through this new delivery layer, this new experience layer. Mm-hmm. When you look at traditional banks, you then have the likes of BBVA and JP Morgan Chase. You can see over the last few years, they've injected more technology people into the leadership of the business. But you might look at some of the older incumbents today and you look at the org chart, or you look at their board, their investor page, and there's not a single technologist on the board. And to me, that's usually a sign that, they're a long way from culturally having an organization that's ready to do the real work behind digital transformation.
Oh, interesting. So let me ask you this: what is the fate of those companies, those banks that don't make that transition to Bank 4.0 as far as you're concerned?
No, look, we've seen patterns of this over the last 250, 300 years as new technologies come in and disrupt. And ultimately, I think a lot of bankers think because we're in a regulated sector that they may somehow be immune to these threats. But in 250 years, as we've seen all of these different disruptive technologies appear, what we've learned out of that is there's been zero organizations throughout that 250-year history that have been able to just keep their business model the same and be immune to disruption. And secondly, that whether you're in a regulated industry or not has no effect on ultimately how that industry changes as a result of innovation or technology. And so if you haven't already started down this path of transforming your organization to be technology first and banking or financial services second, then my bet is it's probably already too late. Wow,
interesting stuff. I'm really glad we got a chance to catch up with you. I know you've been super busy this season, so it's really been excellent to sort of pick your mind and get to know a little bit about the book and to hear some of your most recent thoughts and insights on what's happening in the industry. I had one last question for you that I wanted to put, sort of following up on the point that you made about sort of looking forward in terms of the future of financial services institutions that make the transition and those that don't. I'm wondering, in terms of, say, by 2025 or so, not too far out, sort of what you are looking at, sort of whether you want to call them predictions or major trends for banking and fintech, looking out toward sort of that marker. What are the sort of changes that you are most looking forward to seeing or hoping to see by then?
Well, I think we are probably seeing right now, when you see the likes of Revolut and Monzo and N26 and TransferWise and Betterment and these other players in the field, you are seeing essentially a reimagining of the industry in terms of the org chart, but also the core economics, the underlying economics, how customers are acquired, how customers are retained and engaged through that digital layer. Now, what that ultimately is doing is setting expectations with the market in terms of what is possible. And so I do think the underlying economics and the market expectations around how financial services will operate and structure will, come out of the other end of this with some fairly significant changes in market expectations and market performance, the way financial services organizations are measured. And that'll be reflected in the share price and investment and all of those sorts of things. And we see that already starting to happen. The top performing tech companies in the US, the FANGs, well, now they include Microsoft in it, but Facebook, Amazon, Apple, Netflix, Microsoft, Google. And in China, it's BATX, Baidu, Alibaba, Tencent. So, these are the top performing companies in the stock market. So we can rightly assume that in every sector over the next 10 years, the companies that dominate each of those sectors, whether it's agriculture or healthcare or financial services, will be technology players. Because ultimately, it comes down to how the market drives performance. And if you look at JPMC, for example, or BBVA or someone like them, in terms of they're quite profitable organizations, they can generate somewhere in terms of net profit per employee, say between 80 and 100,000 US dollars per employee per year in profitability. But Ant Financial, the largest privately held company in the world, worth north of 150 billion today, they generate $60 million profitability per employee.
Great.
And so where's the market going to take this? I think it's pretty obvious, right?
Yeah, wow. Fascinating stuff. That scale always, every time I'm reminded of those differences, that really puts things into quite stark relief. Very good stuff. I want to thank you again for joining us. It's been a really fascinating conversation. I've had the good fortune of being able to have spoken with you previously on these topics, so it's really great to hear some of your thoughts and insights on this. I just want to thank you again for joining us today.
It's great. It's always good when you've got a new book out to sort of be able to have these conversations. I've been, the book came out in October in most of the world and December in the US. It's still going great, but it does generate a lot of conversation. That's really why I do it. So it's a pleasure. I'm really happy to support Finovate and the team. They're a strong partner of us with the Breaking Banks podcast, of course, as well. And thanks again for the opportunity, pal.
Yeah, absolutely. I enjoyed Augmented, and I have my copy of Bank 4.0 and looking forward to settling down with that this week as well. So I wanted to, of course, thank Brett King. I also wanted to thank all of you for joining us today on the call and checking us out and listening to our conversation. We're hoping to see all of you at Finovate Spring coming up in May as we return to San Francisco. That'll be May 7th through the 10th. And as a special bonus, all Digital Week attendees are eligible for a 10% discount. You can see the slide up on the webinar there for the relevant discount code. So thanks again to all of our folks attending and listening to our call today. Thanks again to our guest, Brett King, and we'll see you next time. Have a great day.